afternoon. Sorry about that. How are you all doing? Afternoon all. Sorry, my mic wasn't working then. Just had to fiddle about with it. That's why I was coughing, because it wasn't working. Then it suddenly started working when I started coughing. Afternoon, Paul, Crom, how are we all doing? So it's a busy day and busy yesterday, as you can see on the chart. Yesterday's rate announcement sent the market into complete lunacy mode, which it quite often does. Oh, I haven't launched my terminal. Hang on one sec. Just wait for my Darwinex terminal to launch. Otherwise, I'm not going to get the opening range trades on. In fact, I'm not sure I'm going to take them today. I need to have a look at what the market's done for New York. There we go. One sec. Switch over to US markets. Okay. Yeah, ADR hit. Tricky one today. So I didn't trade the indices at all this morning. Quite glad I didn't. Actually, well, I don't know. Maybe I wasn't quite glad I didn't. No, they would have hedged this morning. I know someone in Telegram said they got a hedge on the DAX. Where was the break? There. So it broke down initially, then screamed up. Have been kind of monitoring it a little bit this morning, but yeah, big moves on all indices. So yesterday, obviously, the interest rates changed, but they didn't give us the 0.25%. They gave us the half, which is what we were kind of thinking might happen, but market again was just really, really unsure. And Powell delivered the big one. So yesterday we got the 0.5. The FOMC press conference, as I said yesterday, and is always the case, the market doesn't really make its move until that press conference finishes. It's usually sometime around about 8:15. The market tends to then start the move it wants to do, because it's waiting for Powell to confirm everything. And as you can see from yesterday's talking back here, that was the rate announcement. You get the spike. Then it tends to sit around and wait for Powell to confirm. Now, the upshot of what Powell said was gradual decline, very gradual. So the basic, the long and the short of everything he said was, we're going to give you 0.5% this time, but don't expect that to become the norm. We will be going 0.25% and freezes from now on. So the dot plot, which is this here, shows you the forecast and the most likely forecast for interest rates for the US in 2025 being somewhere in the region of 3 to 3.5%. So as we've dropped down to 5, we've got quite a long way to go to get there. But by the end of this year, we'll be down at the 4.5 area with pretty much 100% certainty. So another 2 drops. So a 1% drop next year and another 0.5% drop this year. We've only got 3 months, meaning that we'll be dropping 0.25%. A couple of times. So the next rate cut is forecast to be November, October being a freeze, see what happens with CPI and then react. So as always, everything that comes out of their mouth is data driven. We wait and see what happens with the CPI figures and then we'll make our mind up as we go. But the market yesterday, as you can see from the US dollar CAD, we got a whipsaw and pretty much returned to origin yesterday. So not really any movement there. If you look at the Euro US, which is a good indicator of the dollar index. So this is the inverse of the dollar index, the Euro US. We got the, I think it was 175% ADR move to the upside on the news, and then a complete reversal off the news. And then we closed pretty much where we opened. So the market didn't react. It did react, obviously, but it didn't react with direction. This morning, we've had complete chaos on virtually everything. If you look at the ADR dashboard, there's very little that isn't lit up like a Christmas tree. So big moves gone in today, but again, market really not got any idea where to go with it at the moment. So this is where we opened. We dropped by, on Euro US dollar, we dropped by 54, so that we dropped an ADR. We've rallied 200 ADR. We've just dropped another ADR. So the market really hasn't got a clue where it's going at the moment. There's a lot of volume coming in, a lot of orders coming in, but chaos basically. So lots of whipsaws, no direction. Pound US dollar. We obviously had very similar price action on the pound US dollar. We've just had the pound rates announced this afternoon. They came out as 5 as expected, which is what we was, Bailey's basically said we're not changing. We knew that. The interesting thing is that there was more of the members voting to freeze rates than there was to drop them. We were expecting 7 freezes and 2 to vote drop. We actually got 8 freezes. So much more bullish than anticipated with the UK. And basically the market also now with the UK not really factoring in any rate change necessarily next month, November, if I can get to it. November being the next cut that we're going to see with about 66% chance. So unless that interest rate or rather inflation drops on the pound, we're not going to see a drop in September either. So it means that it looks like what we're going to get is really gradual interest rate drops, like much, 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 much slower than we went up, meaning that there's not going to be anything that's particularly strong or particularly weak because we're all coming down very, very slow. So the Fed have followed basically the stance of the Europeans. Basically, we've dropped it very quick, and now we're going to do it very, very slow, or we won't change it at all. So it means there's no real bias, long or short, on the pound or the US. We know that we're going to drop rates at least another once or twice by the end of this year, but it's only going to be 0.25%. So the market will be factoring in 0.25% drop every month or so, meaning ever such gradual decline. If they both do that, you're not really going to get any advantage on any currency, meaning that all currencies have kind of become fairly neutral. So, yeah, it's kind of almost like hitting the reset button with interest rates, which is very indicative of what we've seen recently with all this price action, where we've had a lot of this. The odd news event that shocks the market into, oh my God, they're going to do that. Oh, they've changed their mind. Oh my God, they're going to do that. Oh, they've changed their mind. So in theory, you could trade anything pretty much in any direction at the moment. The only currency that is staying fast and not dropping interest rates and is in trouble is the Australian dollar. So everything else is kind of neutral to bearish over the next 6 months to a year, apart from the Aussie, that will become that way. So very hard to pick apart what was said yesterday, but the upshot of it seems to be, and as you can see by what the market's reaction is, excellent. Now what? Yeah, so there's nothing really happening at the moment. So what I was expecting to see today was a big rally against the US, i.e. the market continuing, dropping the US and everything rallying against it. We actually got it dropping to start with, so a very weak US dollar. Then we had a very strong, and now we're getting weak again. So today really gives no clues as to a directional bias. Stock markets obviously have all gone skyward because the weakness that we've had in the US to start off with, but that, as you can see, is undoing itself. So really difficult to sort of pick apart which bias to have on anything. And really, I think at the moment, bias has got to be pretty much neutral. So overall, probably better off shorting everything against the US than you are longing it. But equally, I don't think it's going to be a strong move. So kind of need to give this week a chance to play out and let the market play its hand and see which direction it's going. But as you can see at the moment, we're not going anywhere. So I took a US dollar CAD long, which is just about to hit TP. Might as well give it to me live while we're on air. Go on. So mean, there's an argument for moving this TP up, but I'm not going to get greedy. So yeah, I took a US dollar CAD long today because we rallied right down. We didn't stop, basically. Look, if you can see, I've got the 9MA on the 5-minute chart here. We hugged that thing all day long. There was no signals to go long at all until there. So I took it, expecting exhaustion, and that's exactly what we got. That's going to... market's about to open, so I'm going to just bank that $370 just before the market opens, just in case the market opens really bullish. Then obviously the US dollar is going to come down. So if it opens bearish, obviously it's going to fly, but it doesn't matter. I'm taking it just in case. I don't want it coming all the way back down, and just might as well take the money. So yeah, I took that today as an ADR reversal because that was the 200 ADR today. So I was watching these build throughout the day. That was the one I decided to jump on. I also jumped on Aussie dollar Swiss. Again, might regret this. It's a Swiss franc pair. So I jumped on this one because we've got a hourly RSI extension up at the 80 level. 4-hour RSI also way extended. Yeah, so we're up in these realms where we very rarely don't get some kind of nice pullback. Yeah, so we're very extended. The other reason I like this one specifically is because we've got a double resistance coming up. We've got a weekly high there, a weekly high there, a monthly high there, and another high there. So this area here, this whole zone and this propulsion gap are resistance. So we've got a lot of resistance here. We're also extended 150 ADR. I got in at 100 ADR. We got in a little bit early, but it was nicely extended. So yeah, short on that as well. I know it's a Swiss franc pair, but I'm not really that worried about being short against the Swissy because obviously, especially with all these pages and walkie-talkies blowing up in the Middle East, there's a good chance of some kind of escalation in the Middle East, in which case the safe haven runs are going to start, the Swiss franc's going to rally, and this is all going to come down. So I don't mind having a short on this. The only thing that concerns me is obviously we've just broken those highs. Well, we haven't quite. We're at the highs. We've got the monthly at 200 ADR. So if we don't get some kind of reaction there, we're looking at sort of pushing up into that next resistance. Other than that, it's clear air. So if we get a second entry here and don't manage to get a pullback big enough to get out of the trade, there's a long way to go. So yeah, so I took one of those this morning as well. Euro CAD, Euro Pound, and Pound CAD already had on. So yeah, put a bit of exposure on today, banked a bit of profit, which is all good. Market's just opened. I will have a much more in-depth look at everything in a sec. Dow has gone long. Slightly worrying when we've done ADRs. I don't like trying to get into momentum breakout plays after the momentum's gone all day. I mean, it may well continue, but this thing's had its volume today, hasn't it? So we'll see what happens, but always a bit tricky taking breaks when you've got ADR. Usually it's off the back of news. This is obviously not off the back of news. It's just pure craziness today, which is always good. Afternoon, Youssef, Brian, Church, Monkey, Virginia, Mumo, Chucks. Brian, it's time. Roger, how we doing? So yeah, we'll see where we go from here, but I can see a pullback today, but then obviously we'll see where we go, but we'll give that a few minutes to unwind. So yeah, so news-wise, obviously, yesterday's CPI, obviously we covered when I did the live from yesterday morning. The FOMC side of things, difficult to unpick really anything bullish or bearish out of that yesterday. It just seems, it's almost kind of like we were expecting it. And I remember I said on, well, I said whenever I've said it, Monday, Tuesday this week, the market has been factoring in a drop on the US for the last 3 to 4 weeks. It's looking like it's already factored that 0.5% rather than the quarter. And it was pretty much a 50-50 shot, although it was more like 60-40 to a quarter, and we got the 50. But so, yeah, don't really have any sort of bias. There's no reason we should be screaming down on the US, put it that way, because we've already had the drop. So it's whether or not the market's going to continue to do that. We'll have to wait and see. So GDP also came out, and the Aussie unemployment rate unchanged. GDP slightly down on, or slightly better than expected on New Zealand, but it is still down. So all negative news really for the Aussie New Zealand. And then obviously we've got the rates just come out there. We've just had Bailey speaking. As I was coming on, here we are, Bailey was talking. So I just wanted to see what he said. I'm optimistic UK interest rates will fall further, need more evidence. Gradual path down. Again, very, very, very slow cuts. Services inflation is still elevated, as is food and energy, which is why we're not dropping rates. Nothing exciting you said there at all, is there? So yeah, quarter point cut is the next one for the US, again being confirmed there. So unless we get some kind of crazy unemployment spike or anything stupid, then I think we're just going to look at very, very, very gradual movement with all these interest rates. S&P has broken to the downside if you're taking a pre-market on the S&P. Pre-market range was 81 on a 79 minimum. So that's just broken short. Nasdaq's not able to do anything. What's the rest doing? DAX is so DAX is also up at all-time highs today. So we've broken all-time high today. We're up at 125 ADR on the DAX. Didn't really stop after that initial kind of little drop down it had. So we're stalling up here. As I said to someone in Telegram, we usually get some kind of reaction at all-time highs. It will often get through it, but doesn't really get much further because the force it takes to break an all-time high is quite strong. So you tend to run out of buyers. It doesn't mean they're not going to, pull back and add, which is normally what happens. But you normally get some kind of reaction at that level where we just run out of steam. So I wouldn't be surprised to see a bit of a pullback below the all-time high today. And then obviously we'll see if they continue for the rest of the week. But DAX, yeah, all-time highs gone. So that is indicative of euro weakness as well. So you can see we've got a fair drop on the euro today. Apart from the Swiss is dropping as well. But yeah, interesting day. Afternoon, Egosa, Peter. So ADRs and RSIs today. Just quickly see what's going on over here. So the 5-minute opening range is in on the Nasdaq, bearish. The Dow is bullish. The S&P is bearish, very bearish. So there's your 5-minute break to the downside on the S&P. So if you took the pre-market break, you're short. If you took the ORB, you're short. Dow is a long. Nasdaq's nothing at the minute. You'd be short if you took the opening range. It's just worrying today. We've just done so much volume today. I just worried the market's just going to sit in there and just do nothing today. It's exhausted, especially with the DAX making all-time highs this morning. They've been buying a lot. DAX is double topping at the open. So got a double top there. Just gone in with a bearish engulfing. So we've just hit that high, immediately rejected it. So potential weakness forming on the DAX there as well. So they may start to unwind this move today, which means I'm going to hedge the Dow, short on the NASDAQ. Come back to that in a minute. Right, yeah, so ADRs today, take your pick, pretty much everything. So the only thing, it's easier to go through the things that haven't hit ADR today. Euro CAD, Euro New Zealand, Pound CAD, Pound US dollars not loaded for some reason. Okay. Does that every now and again. I don't know why it's the Pound US dollar. It's very weird. It's the only one that seems to have some kind of weird glitch in it. But anyway, Pound US dollar, obviously that's hit. So New Zealand CAD and US Swiss. US Swiss is like 4 pips away from hitting ADR. So, you know, it's pretty much hit this morning on that rally. So it hasn't quite hit. Same with the New Zealand dollar CAD. That's 62 off of a 64. So that is, again, very, very close to hitting this morning, and it's obviously reversed. So all of these were opportunities to get in today. If you whiz through them, looking at a 15-minute chart, Aussie CAD, there's your reversal. Depends if you want to take 5s or 15s with them, but look at a 5-minute chart and just scroll out. So there was your reversal off of ADR on the 5 and your M pattern short. Aussie dollar Swiss, that's just come off. We've just had a reversal alert going at 150, but you would have had reversal alerts throughout this because it got fairly decent market structure, so that would have alerted probably roughly where I got in. Aussie yen, so all the yen pairs, big move up today on the US weakness. Unfortunately, I got out of my Aussies yesterday. It's a nice profit. I made a grand or so on it, but today would have been a big payday if you'd have held it. Even if you'd have just held it overnight, by the time I woke up this morning, I'd have been at ADR. So yeah, big move up on that one. Again, that's 150 ADR at the moment. Might as well just whiz through all the pairs, hadn't we? So we got 4-hour RSI extensions and hourlies as well. So I might as well just quickly whiz through all the pairs because everything has got an opportunity to get into today. The only thing I've taken today is that US dollar CAD, which I just got out of there. So that is now back up. Look at that, it's crazy. So this US dollar CAD today, we've pushed up 1 ADR, we've dropped 225 ADR, we've pushed back up again 1 ADR. So total movement on this today is 4.5 ADR pretty much. So 4.5 times the average day of range, and we're still going. So huge volumes coming in today, but absolutely no directional bias at all. So opportunities everywhere. When the market's moving like this, it's quite difficult not to make money, but no idea what to get into. So just that is just what stood out to me today. Yesterday's low ADR, took it and it's straight out, so it's lovely. But so Aussie CAD is pushing up. Just going to look for what's resistance wise. So yeah, Aussie CAD, you got a monthly high here. Very good opportunity for a short. What's my exposure? I just need to check my exposure, see what I'm in. I've got an Aussie short, 2 CAD longs. I've got no US dollar on. No yen, no US, no yen. So Aussie CAD, that's up at the 2-month high. Nice rejection there. Huge extension. We got extended and embedded divergence short. 4-hour RSI is also extended. We looked at this one yesterday. It was nicely extended. You've got more divergence going in there. I mean, it just looks lovely for a short. Beautiful 4-hour rejections at the monthly high. So limit orders sitting at the monthly highs, triggering there. You've got 2 big wicks for the last 8 hours. This thing's been trying to get through that level. We're pushed up, rejected. We've tried again, rejected. Yeah, we can break that low, move into that propulsion gap. That thing will flush and be down here. So good looking short opportunity, Aussie CAD. We looked at this one yesterday because I was looking to try and get into it, but I've got Euro CAD and pound CAD short, so I can't take this because it overexposes me on the CAD. But really good opportunity for a short there. If it does break that level, you're off up into here, aren't you? I mean, the chances are it's not going to get, it's extended on the daily as well. It's not going to be able to get all the way up there without some kind of pullback. Aussie dollar Swiss, so that's sitting at 150 ADR. So this is the one I've just taken short. So I like these levels, love the backup levels we've got coming as well. We're extended on the hourly, we're extended on the 4 hourly. So this is an H4 M15 mean reversion entry. It's also an H1 M5 if you wanted to take it, but this is the RSI level we're up at the moment. If you look at the last, this is the last year basically, pretty much 6 months. 6 months. So we're up here, so we should get a pullback, at least a little profit take on the leg that we're on at the moment, which is this. So pulling back, and then obviously if it wants to carry on, that's fine, but playing the pullback on it basically. So second entry will be going in at the monthly high, 200 ADR. We could get there today easily, but I doubt we'll get there today. So that's pretty good. Aussie Swiss. You would have taken that if you're H1 M5 or H4 M15 with the EAs anyway. Aussie yen. So all the yens basically rallying today. So continuing this pullback. So yeah, lovely pullback basically. I got out too early on this yesterday, but we're coming back up into that propulsion gap. So it's whether or not we're going to see this yen weaken now off the back of this US news, or whether they're going to continue strength and give us another down leg. So all the yens today, all ADR hits to the upside. Nice reversal going on the CAD Swiss there on M5. There's your reversal alert. CAD yen 125 ADR, that's just starting to reverse as well. DAX is coming off that double top. Nasdaq's just hedged me. Hedged on the Dow as well. I was worried about this. This is why don't I listen to myself? I didn't trade the DAX this morning because I was worried about a big move, which we got, and a hedge. And I was worried about hedging on here today, but I thought because I didn't trade the DAX this morning, I'll trade this. Done exactly what I thought it was going to do, which is hedge me. So the DAX has just come off the double top. So there's that bearish reversal there at 125 ADR. Selling off hard. So we're looking for a profit take move on this leg. So watch this here, which is your pre-market high. That is yesterday's high off the news spike. So yesterday's high and pre-market high, that propulsion gap here. So this whole area with these two propulsion gaps is your break of yesterday's high and the pre-market levels. So that's where the buying happened. If they're going to add and rally, that's where you'll find they'll add the second part of the order. So it's coming down nicely. So is the Dow. S&P's at 1R. Nasdaq doesn't know what it's doing. So CAD yen, Swiss yen, again, 100 ADR move on that one. That's just sitting around at the moment. Nice M pattern potentially there, but that is also just part of normal market structure long, potentially. Again, all these yens, still no idea what the yen's doing. 125 ADR there, but hard to get into these yens. If you take these short, and they do rally, you are just going to pay an absolute fortune in swaps. I'm just not interested in anything but shorts on these. Sorry, anything but longs on these. So if you short this and it rallies, it's just going to cost money. So I'd rather go long if I'm going to do anything on them, but I just don't really want to touch them at the minute. So yeah, all extended. You've had payouts on half of these already. So Aussie New Zealand. just flip-flopping around at the moment, but you had a 125 ADR rejection this morning. That was, I think that was at the end of Asia. Yeah. So as London opened, we dropped. So your reversal alert was there, but M5. We've got new signals. So that was your ADR 125 hit. So your reversal alert was there. So that was your entry candle short today. Aussie US, again, all coming off a 175 ADR. Monthly highs. So not a very good rally up into that, but all coming back down again. DAX really hammering down now. So yeah, Aussie US missed it. That was all the way up there. So that's already played out, that one. Unfortunately. CAD Swiss, again, already played out. So you've kind of missed all these. So New York Open, they've all started to move. That one you could probably still get into. Play it back up into there. So EuroCAD, I've got two on at the moment. Second short. So that was the first one. Second one was taken on Monday. We've had 2 days sideways. We've just had a reverse alert go in, which is good. So hopefully this bearish move will hold and we'll come down to target. I'm targeting that area there, but obviously we could get further down. News-wise for the rest of the week, we've got home sales at 3 o'clock in 10 minutes, which doesn't tend to do an awful lot. Tomorrow we've got the Bank of Japan press conference and Bank of Japan rate. No change on the rates is forecast. They've said they're not going to change them, so we should be fine. So what reaction that has, we'll have to wait and see. But tomorrow we've got retail sales for the pound, and we've got the CAD retail sales tomorrow afternoon as well. So looking at these CAD pairs, if we get strong retail this afternoon, these could easily be back down here tomorrow. So we could get a nice ADR push out of the Canadian dollar tomorrow. But equally, obviously, they could come out very, very weak and go the other way. So we'll have to wait and see on that tomorrow. But I'm not going for a massive target on that. Just looking for an accumulation bounce there. Euro Swiss, that's coming off of 125 ADR at the moment. So just starting to reverse. You've had your 5-minute reversal alert just gone in. Euro Pound, 2 positions long on that. Haven't put targets on this one. So second entry was taken today. First entry yesterday on this. So we're not going to get there today, but it's going to put the targets up. In fact, I'm just going to target that lower propulsion gap there. So average is here. We may well add more here and obviously continue down, but if we don't, that's a 50% retracement basically on that leg. Euro yen, again we cover the yens. Euro New Zealand, that's not quite got an ADR today. We've just come off of those lows, so this propulsion gap again holding up. We bought it 4 times. Looks like we're buying it again. New Zealand dollar had not great news, not bad news this morning, and we should be seeing continued weakness in the euro. So this could go either way, really. But no extensions on ADR, no extensions on RSI, so nothing exciting there. But it is a propulsion gap bounce. But again, you've kind of missed it. Would have been in on it earlier. It's just retested actually, so. Not the greatest in the world. Euro US, missed it. Unbelievable, that move. So yeah, that's the 400, pretty much pound US and euro US 400 ADR plus move today, up, down, all over the place. Market not got a clue what to do with this. So we're back, basically, this is where we were yesterday when the news came out, and that's what we've done today. So basically in the last sort of 24 hours, the market has whipsawed 400 ADR and has reset itself. So your guess is as good as mine on that. As you can see, there's nothing set up. There's a lot of strength in either direction, but no relative strength on one currency or the other. So there's not really any setups there. ADRs today, if you took the ADR long, well done. If you took the ADR short, well done. You're about to get another ADR long. So it's just an absolute mess, that one today. Pound odd came off of 125 ADR to the downside. You wouldn't have got into that because it was a new spike. So couldn't have traded that really today. So propulsion gap bounce again. Pound CAD, that's just sitting flip-flopping around. I've got two shorts on that one at the moment. Targets. Again, I'm just going to adjust target down to that propulsion gap. Now I've got two positions on. So very much like the Euro CAD. If you look at this, the price action here, and then look at the Euro CAD, it's pretty much the same trade. It's more accumulative up there, but it's pretty much the same trade. So I'm targeting that accumulation just to retest that, just in case it bounces. Pound Swiss, ADR reversal, nice 3-bar reversal going in on the hourly there. So a big push up, pause, push back down again. So within there, you've got your 5-minute reversal alert. So again, that may well hold up here. We'll have to wait and see. But again, that pound, not strong, not weak. Bailey basically just confirming that we're not changing interest rates, telling us that we're expecting CPI to bounce. We're going to hold the rates. So there's no reason for the pound to massively weaken. But again, no reason for it to really be that strong. It's probably going to be stronger than weaker because obviously we've got high interest rates. So the differential between interest rates is now better for the pound. So if you look at the pound now, we're sitting at 5. New Zealand dollars at 525. US dollars at 5. Everybody else is now below. So we are the same pretty much now we are the same as the US now. But everybody else is below us, meaning that you're better off having your money in the pound because you're going to earn more. So more likely to attract more money into the pound than it not. But doesn't mean it's going to be strong necessarily. Pound New Zealand, that's completely sideways. You had the ADR hit to the downside. Again, you probably wouldn't have gotten on that because the reverse alert came on the news. Yeah. So actually, the reversal, actually, the ADR reversal alert was that candle there. Just about. So you would have got in long there. And then that was the second reversal when it broke the low. So you wouldn't have been able to trade that. You'd have got in up there, which is no use. Pound US, again, same thing as the Euro US, all over the place. No idea what it's doing. New Zealand dollar CAD, sorry, just look at the indices. Back up, NASDAQ inside the range. We just broke short, coming back inside the opening range. The Dow has bounced off of yesterday's high, as has the S&P 500 bounced off yesterday's high. So just, again, total whipsaw at the moment. This is what I was worried about with the indices today. But never mind. New Zealand dollar CAD, ADR, just missed to the upside. We tapped into yesterday's high, but this is a monthly high from last month. So potentially good looking short opportunity with limit orders triggering at the highs there. So they have tried to break yesterday's high and failed. So coming down into all these propulsion gaps potentially on that one. Again, would be helped along with Canadian retail tomorrow. New Zealand dollar CAD's just sideways. That is an ADR hit to the upside as well. RSI extension to the upside. So quite a lot of RSI extensions. Good exhaustion up there. Reverse alerts just gone in on that one as well. Whoops. So there's your reversal. Very ugly, but it is there. New Zealand dollar, US dollar, again, beautiful. Yesterday's high rejection today. Any yesterday's high rejections or any reversals you've taken above 125 ADR today, pretty much every single one of them has just played out beautifully. So don't often get days like this, especially when the market's so confused directionally, but they are absolutely brilliant for making money. Doesn't matter which button you press. Today, it's just working. So especially if you're mean reverting everything. So, multiple entries to get in. There's my pound CAD. Got out way too soon on that. Could have doubled the profit on it. But always better to take the profit at the New York Open, because if it does that, I don't get any. If it does that, I still get some. Win-win. US dollar Swiss, again, flip-flop, not ADR, just sitting around, not really knowing what to do. So massive opportunities everywhere today. Your RSI dash, the reason, as you can see, I got into the Aussie dollar Swiss, should be clear. It's the most extended thing on the planet at the moment, Aussie Swiss. So it's an hourly RSI extension, 75, almost touching the 80. 4 hour, we're well above. We're at 89 on the 4 hour. So very big extension, almost up at the 90 level. The 90 level, very rarely get to. By the time you get to the 90 level, it's shot. Not got much else to do but drop. So unfortunately didn't get a second entry on that. But that is your weekly high rejection going on there. Euro odd is also a good looking short from a 4 hour perspective. Long. From a 4 hour perspective. Again, very similar to that trade there. So you can get in long on that one. Doesn't fit my portfolio at the moment because I've got Euro exposure long and short. I'm hedged on it at the minute. But a good looking long opportunity. Pound Swiss as well. Big extension to the upside. Monthly level, RSI. That's the actual monthly open. That's last month's open there. But as you can see, it's just part of that collapse we had with the Swiss franc and the yen intervention. So not really a good level. And that is the close, or rather the low of the previous month. So that high and that low there are actually just bang in the middle of that drop. So can't pay too much attention to those levels. However, anybody looking at monthly charts, that is placing orders at highs and lows of months, they are very relevant. So big institutional players will be using those levels. They don't look at the intraday charts. They're looking at the price points, and that price point is a monthly level. So that's why we get reactions at them, because there's orders at them. You've got New Zealand dollar Swiss as well, also massively extended on the 4 hour. So again, massive extension there. Not a level we get to that often. Yeah, so where we are now, we were there. That one, you got a tiny little pullback. We actually rallied for 2 weeks after that one before the drop. You got one there as well. Yeah. So the rally that we've got going on at the moment, as you can see, isn't particularly big compared to the rally that we had there. It's more inclined to be something along those sorts of lines, isn't it? So there is a possibility that we might get a multi-week rally on this New Zealand Swiss. And the same with the Aussie Swiss. However, the Aussie Swiss is much better from a resistance perspective. We're likely to find more above there. But again, it's the same thing. Don't get there very often, but when we do, market is often exhausted. If it's not exhausted and it carries on, it's just getting more exhausted, giving us a better opportunity. So yeah, all good. So there's all your levels and everything today. Loads of opportunities all over the place. New Zealand dollar yen is also extended on the 4 hour. That's rolling over at 125 ADR. So again, nice big extension. But again, these yens As we know, RSI on the yens doesn't really mean a lot at the moment. The yen is a law unto its own, so just be very careful with it. There we go. Lots and lots of stuff going on. I'm trading Swiss and yen pairs again. I'm not trading yen pairs because I got out of the yen. I was in the Aussie dollar yen. Just one. I'm limiting myself to one. And it's got to be a really good setup, yeah? So it's got to be something that I've got confidence with. So if I'm going to get into a yen or a Swiss pair, I'm not just getting in on RSI or ADR. I'm getting in because I've got confluence. I've got an extended RSI, which is embedded with this level that we are testing after a false breakout. So I was waiting for a false breakout back into accumulation. Didn't get it. So for me, that was a really good setup. Plus, it was a positive carry. So I'm not going to pay swaps on it. So I was happy to hold it. And I had to hold it for, as you can see, 1, 2, 3, 4, 5, 10 days-ish. And the Swiss today, again, Aussie, it's just got loads and loads and loads of resistance. So where I got in was ADR, extended on the hourly, double weekly high, monthly high, previous limit order trigger. Yeah, and then we made lower lows, lower highs there. So there's going to be limit orders, I suspect, at this level, which are triggering now, obviously, as you can see. So those are the limit orders triggering these two black lines, so the weeklies. So you can see we hit, rejected. We've tried to get through it, rejected. Just about to get a reversal alert. That's my entry. But if that fails, and I'm just going to go these highs basically as a target. But if that fails, there's a good backup coming at 200 ADR, where we're going to find more limit orders. So it's got to be a really good. If I'm going to trade the Swiss or the yen, it's got to have more of a case. Yeah, I cover that. I think it's in the bootcamp. I cover it, but I use the analogy. I think it's in the system. What a system is video. I use the analogy of a solicitor. Yeah, if you walk into a courtroom and you've got one piece of evidence, and that one piece of evidence gets ripped to pieces by the other party, that's it. You're dead. Yeah. But if you walk into a court with 5 pieces of evidence and they rip those 2 apart, you've still got the other 3 to rely on. Yeah. So we're extended on the hourly RSI. We're extended on the 4-hourly RSI. We're at 150 ADR. We've also got upside weekly and upside monthly resistance coming. Yeah. So I've got 2 RSI extensions, an ADR extension, a double weekly and a monthly level. That's a 6-star trade as far as I'm concerned. Yeah. If it was just extended on the hourly RSI, I wouldn't be even looking at it. It's not enough for me at the moment. On other pairs, it's fine. But on the Swiss, because of the yen intervention and the reaction that the Swiss had to the yen intervention, I want a case, real strength for going short. The other reason is it's a short. And I'm more inclined to short the Swiss and short the yen in case it blows up in the Middle East. If it blows up in the Middle East, this is down here. So I've got a lot on my side to help with the trade if I need it. But that's the only reason. And I'm not taking any other yens. That Aussie yen just looked really good. It was wrong. But I've still made a couple of grand out of it, so I don't care. Did somebody mention a pair earlier? I'm sure I saw a pair fly past in the chat. Yes, Mumo. Euro CAD short reversal on H4. Yeah. So I'm already in this anyway from last week. So I was looking for rejection at that weekly high, and then we had the rally this week from the CAD and the the drop this week from the US and the CAD based on obviously them getting ready for the news. Really good rejection, 3-bar reversal there. and then another whacking great wick gone in there, look, on the 4 hour at this level. Yeah. So that high, we've tapped into it. That's where they sold for a week and a half. They've just added, as far as I'm concerned, more sell orders there. And that's your M pattern. So we're looking for a lower high and then break down into these propulsion gaps. But I'm just not being greedy. I'm just uber cautious. I'm always uber cautious. So yes, good looking short opportunity. That hourly reversal alert has just gone in. It's not a nice reversal alert, that. It's a range break, basically. So you've just had a range break. The retest of that will be the strongest. So a break of that low will be much stronger. But then you're running straight into propulsion buyers here at a previous weekly high, which we've broken out of, which they will look to add to, and an accumulation there. So it's not the greatest from distance down, but good CAD retail tomorrow. You'll break that and you'll be off. I hope so anyway, because I'm short. We'll see. Morning, Matt. Just call me Scalpy McScalper today. Yeah, one of those days where if you're McScalping, you're probably doing extremely well. But I haven't been McScalpy today because I've been McCity watching what the hell's going on today, because I'm still not convinced the market really knows what it wants to do. When you see days like this, from a position trading perspective, that as far as I'm concerned, for the last 48 hours, nothing's happened. This is where we were on Tuesday. Yeah. Yesterday, the Fed changed their rates. Today, the pound didn't change their rates. Yeah. The Fed did something we weren't expecting them to do. And the market is basically back to where it was on Tuesday. So I just don't know what to do with that at the minute. So I'm going to wait and see where the market goes. I suspect, knowing how crazy the market is, because the US has dropped its interest rates by more than expected, they'll probably buy the crap out of the US dollar. Even though we've been told many, many times that they're not going to drop it by more than 1% this year. And they've just confirmed that by dropping it half and saying we've got 2 more coming at 0.25%. So they've just told us what we already knew. But I'm pretty sure they'll buy the crap out of the US because everything else is dropping, isn't it? US interest rate wise. So Euro's already gone way more than expected. New Zealand went faster than expected. CAD went faster than expected. The pound is the only sticky one at the minute. We're not dropping interest rates on the pound. So the pound US will probably be the one which you will find will be the more difficult to move. But again, you know, that's the range from Wednesday. That's your whipsaw, and that's your whipsaw. So we're basically back within Wednesday's range again. Just, but the trouble with scalping on days like this, you know, we see on FOMC news, we see 300 ADR moves, no problem. If the market wants to, the market will just put a 300 ADR move in the day after, and we get those big moves. If you go back and look at previous FOMCs, not last year, but the year before and the year before that, the move tends to happen the day after and then the week after. That's when we get the move, not on the day. We don't get that move, but we quite quickly get that move happening straight after it. Today is what I was expecting to be that move, but right now they're either very confused or they've got a cunning plan, more cunning than a cunning thing on a cunning day, and they're not going to tell us what it is. So I'm just sitting on my hands until we get some clues, basically. But if they fill these propulsion gaps today completely, it just means they've just dumped a load of money in the market. So the expected move for me would be bull on the US. But who knows? Do you think the Fed are panicking to drop interest rates by 0.5%? They're worried about a recession. Yeah, well, the labour market is basically what they've been worried about for the last 2 months. So what they're petrified of in the US is unemployment rising, and we're sitting at 4.2, and it's coming down at the moment. So they're worried about this bouncing, and while they've got this under control, they've dropped it basically. So if this is going up, it means they need to drop that quicker. The fact that it's going down means if they drop that, they can get on top of that faster, and hopefully that won't pop. And it's the cooling of the labour market, which you probably heard them saying in Financial Juice and stuff, which is what they're all worried about at the moment, especially in euro. Yeah, and that's why they went 0.6. That is far too high, 6.4%. It is starting to come down, but we're all trying to get these down as fast as we can to keep this under control. And it's starting to show signs it might go up. So this is why the market was sort of anticipating a 0.5%, because that was what was driving it. This has been coming down nicely. You can see everybody's inflation is doing, apart from the Aussies, as I say, they're the ones that are not changing interest rates. Everyone's inflation's getting where they want it to be. CAD, target. We hit target and have bounced. Euro, 0.2 away from target. US, 0.5 away from target. Everyone's there. So you want this coming down as well, because if you overshoot that and that drops down to something like 1.5, of course, there's even more problems. Then you've got to put that back up again. That's the last thing they want to do, because it drives up unemployment. So it's a fine balancing act, which is why it's always so difficult to forecast, and why you'll hear the Fed and all the banks saying we're data driven. They're driven by these three elements, and it's about keeping them all in check. If they're all going the wrong way at the same time, GDP coming down, inflation going up, unemployment going up, they've got to do something with that very quickly. And that's where we see all the big extra volume volatility coming in, the market expanding, because there's more opportunity to make money, because they know they're going to change these interest rates. The interest rate differentials change quicker. It's how the market sort of works. Bond purchases go up, all sorts of stuff going on under the hood. But at the end of the day, Financial Juice kind of tells you what to expect. And it's very simple. If they're going to drop the interest rates, it will weaken the currency. If inflation is coming down, it will weaken the currency. If GDP is going up, it strengthens the currency. And if unemployment goes up, it weakens the currency. Those are the only four factors. If they're all doing those at the same time, you should expect the currency to drop quite hard. At the moment, it's not happening with any of them. Yeah, so we're pretty stable there. That's doing really well. That's coming down nicely, which means we can drop that down. So that is bearish. That is bearish. That is bullish. That is neutral, but they're worried about that. So you can see they kind of cancel each other out, which means no real bull moves, no real bear moves. You get a lot of movement. And obviously, when you're looking, and this is what it's all about with Forex, it's about currency crosses, which is why we have the scorecard, which is all this scorecard is doing is telling you, based on all the fundamentals, the expected long-term direction is X. Yeah. So why is this so slow? I'm sure this server's knackered. I might change servers. Seems to take forever to load. So all this is telling you is, the bias score is 11, which is a buy on that, because the pound's interest rate is higher than the Canadian's. The change differential is different. We're not changing the pound. We are changing the CAD. So the CAD's coming down. The pound is going nowhere, which gives that a +1. It's more bullish than bearish. Inflation is a negative, but the inflation change is a positive. Yeah. And this is all the banks and institutions are looking at is, well, the pound should be stronger than the Canadian in the future. But the problem is this stuff changes on a weekly, bi-weekly basis, doesn't it? So if you've got the US having everything pointing south, and then the pound has everything pointing south, they're both weak. You tend to get a range, which is that. Yeah. Euro US. Can't quite see it because it's off the screen a bit. Yeah, range bound. Yeah, the euro has dropped its rates dramatically. So now has the US. Yeah, inflation is coming down nicely. So is the US. Unemployment's fairly high and not doing particularly well. So is the US. GDP's good. Yeah, so there's no financial bias, long or short. Therefore, it should do that, or that, or that. But as long as it's doing that, there's opportunities to get in and out in both directions. It's when something does that, it's when you're in trouble. So, you avoid the big ones in the opposite directions. That's the whole idea of it. But this has kind of become a little bit moot since we've all decided to raise interest rates at the same time, freeze interest rates at the same time, and drop interest rates at the same time. Because although that is a buy, because the Canadians are dropping rates and the pound is not dropping rates, the pound is going to drop rates. So at the moment it is, but it will change very, very quick. Stuff is changing too fast, really, to have a long-term bias at the moment. It just doesn't work that way at the minute, unfortunately. And you've seen that from the Fed, over the last, you've been in here for ages, watching me come in here and one day talking about the Fed saying one thing, and then 2 days later, the Fed say something completely different. So, it's confusing times. Afternoon Pot DJ, what do you think of BTMM? Beat the Market Maker, Steve Mauro. Yeah, nothing wrong with his stuff. Doesn't work because he works on pips, but his concepts of market movement are good. But he works on pips and strike zones and things which just do not work. And he works on moving averages, which are all based on historical data, which have no bearing on future data. So it's a strategy, basically. All it is a strategy based on support resistance, really, isn't it? BTMM's got a lot of moving parts. So, BTMM has those boxes, doesn't it? So when you get down into the box, you trade that way, only if it gets into the box. The problem is the box is a set distance away from the open, which has nothing to do with the average daily range. Also, the box distances do not change. So if the ADR changes from 350 down to 150, because the market is quiet, you'll never get that box, which means you'll never get an entry. And the moving average crosses and stuff like that is telling you what's happened 20, 50, and 100 bars ago. I don't care. It's got nothing to do with the next day whatsoever, has it? And obviously, moving averages, you can always find a bounce point on a moving average. So you can always show a setup from a moving average bounce. I can put any moving average on this chart right now, and I can go and find you a bounce and go, there you go. Look at the 27 moving average. Isn't it beautiful? It's a system, isn't it? But again, it's not something that is hasn't got a high enough strike rate and risk reward return to make it long-term profitable. But it's nothing wrong with it. It's Steve Mauro's stuff works on the concept of stop runs. What I think he's saying is I can't remember what he's saying is. Something like don't trade until they hit the stops or something, isn't it? Which is what he's basically saying is there's limit orders at support and resistance. So if they hit the limit orders, go the other way, which is very similar to who's the godfather of candlesticks? My brain's empty today. I've been doing research all morning, so I'm a bit fried. But it's very much the same as other people's research, basically. You get to resistance levels, and the market has to have gone quite hard to get to them usually. Therefore, it exhausts itself. It's the same stuff. Again, you know that video I've got out there about don't buy courses? It's the same stuff. Steve Marrow's stuff is recycled other people's stuff. My stuff is recycled other people's stuff. You can't look at analysis technically without doing something similar to everybody else, because there's not many ways you can look at it. Everybody looks at moving averages. Everybody looks at support and resistance. Some people call it supply and demand. Propulsion gaps, people call FVGs. They call all sorts of things. Wide range bars, bank orders. If you were looking at a DOM, you'd see a pop there, a pop there, a pop there. Yeah. Volume profile. It's all the same stuff. This is showing you volume profile in CFDs, because you can't see the volume from the market because there isn't a centralized volume. But it's the same thing, isn't it? There's a large order been placed by a bank there. They're retesting at the moment, so it could well go long. Yeah, limit orders. All it is, it's showing you orders. This shows you where the buyers ran out of orders yesterday. The sellers added a position there. So what are the sellers going to do if it comes back to their entry point? Try and defend it. The buyers bought here. It's come back to their entry point. What are they going to do? Defend it. They're either going to win or they're not. It's everybody who knows how this market works will teach the same thing in an ever such slightly different way. Obviously, if everybody taught it in the same way, there would be no courses to buy. So you have to recycle it, change it. Otherwise, you can't sell anything, can you? That's how it works. I didn't even know BTMN was still around. It's very, very old. Steve Marrow's. I don't even know if Steve Marrow's still going. Very old stuff. Oh yeah, he's still going. Oh no, this is somebody who's got his course basically. Yeah, again, somebody recycling his course, look. That's all it is. Original market maker method, PDF. It's all out there. It's just, if you go and look at it, you're going to hop systems again. I remember those screenshots. The grey charts. What was it? It was mustard, ketchup, mayo, and someone else. He's moving averages. Basically, I think it was a 5, a 9, a 20, and a 50, wasn't it? Something like that. Same stuff. Recycle. Nasdaq's broken long. Dow is remaining short. S&P is back in the opening range. So there you go. That just proves the market hasn't got a bloody clue what it's doing today. Interest rate drops are two-sided as well. Great for borrowing, business, real estate, stock market, etc. Bleak for job market. Yeah. So there's always two sides to a coin. So when an interest rate drops, it doesn't mean necessarily it's negative. It means they're doing something to boost the economy. Yeah. So if GDP is dropping, it may mean that businesses are being strangled and can't borrow money to expand. You drop interest rates, they can borrow more money, which boosts the economy, which drives the US dollar up. Yeah, this is why fundamentals and economics is so complicated. Every news event that you get can have a different reaction to what it should be. So it will only be negative if there are other things that are not more positive than the negative you've just received. Very difficult. Steve Nissan. No, he wasn't the one I was thinking of. Oh my God, I've forgotten his name. Anyway, doesn't matter. Godfather of Candlesticks. I don't know. I've never heard that name. Munihisa Homer. Never heard of it. Blueberry, that was it. The other one, wasn't it? The 800 EMA. Yeah. again, you know, that proves my point, doesn't it? Right? Let's stick an 800 EMA on here. We'll even make it a blueberry one. There we go. Right. Tell me what on earth this has got to do with what's going to happen next. It's 800. It's the average price from 800 candlesticks ago. 800 hours worth of trading. It's telling me what the average price for the last 800 hours has been. What does that got to do with anything? Has it respected it? No. No, 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 no. Yes, yes, yes. No. Long, long, long stopped out. Oh, short, short. Okay, might have made some money on that. Maybe. But it took you 5 days to make 1R. Yes, you could have got on that. No, because you've lost 4 times. So you, by the time you get to 4R, you'll be going, break even. It's not any use at all. Look at that. What a bounce. Steve Marrow fans last week would have been going through the roof. Hey, everybody, we got an 800 EMA bounce on the pound US dollar. Well done. Where's the rest of them then? In fact, what you should have been using, if you were really doing it properly, is the 810. Yeah, no, sorry, not the 810, the 900. There you go. So the 900 is way better than the 800. Yeah. So I'm going to launch a course, and it's all about the Blueberry 9, I'm going to call it. And it's how good the 900 moving average is. It's almost spot on, look. And then someone will repackage my course, and they'll go, hey, have you seen the 880? What's your view on accumulation distribution indicator? I don't know. What does it do? It's not a standard one, is it? I've got something called accumulation. Oh yeah, accumulation distribution. There you go. No, I don't think I've ever put it on a chart. It's an oscillator. Well, on first glance, basically, if you turn that into a line chart, pretty much mimics the accumulation distribution indicator. Just kind of follows price, doesn't it? There's no levels on it either. It's a reading, so that reading will be different. Any instrument like this, where the top reading is 75,000, the bottom reading is 36,000. If I switch candlestick, over to Euro New Zealand, the bottom reading is now negative 278,000 and positive 203,000 to the upside. If I change to a yen pair, it's 1.2 million up and 1.15 million down. How? There's no midline. There's no levels. It's not an oscillator, is it? It just tracks what price is doing. So I don't know how you'd use it. Don't know. But the theory behind accumulation distribution is basically market structure. So it's basically market, what they call balance and imbalance, balance, imbalance, is accumulation, distribution, accumulation, distribution. So, or, it's basically ranges. So the market will do price discovery moves, which you can see very clearly, not on a yen chart, on anything but the yen. Yeah, accumulation, distribution, trend, accumulation. Yeah, but banks and institutions call this balance and imbalance or price discovery. So again, it's repackaged stuff that is already in existence being retaught. It's just the same sort of thing. I've never used it, so I don't really know how you'd read it. Homer was the Japanese rice trader that developed candlesticks. Yeah, but he's not the godfather of candlesticks, is he? He just made them up. Something to do in maths. Yeah, Japanese candlesticks. It's amazing, isn't it? We're using Japanese candlesticks to this day. It's something that was developed for trading in Japan many, 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 many hundreds of years ago. Don't forget the alligator draws, 5, 8, 13, yeah, all that stuff. Alligator, moving averages. I think the AD indicator is unbound, yeah. I don't know how you use it. I've never looked at it. This is a trouble. I think the last count, there was 1.5 million indicators out there from MetaTrader. Something stupid. 40,000 on the marketplace. And pretty much 99% of those you'll find are something else changed into a new version to make it new. But yeah, I don't know. Measures the buying and selling pressure of a security based on price and volume data. Yeah, okay, so that then is utterly useless in Forex, isn't it? It's no use whatsoever in Forex because there is no volume in Forex. There's no centralized volume. So the accumulation distribution indicator is showing you the volume that your broker has. If you've only got 10 customers in a brokerage, you're not going to have the same volume as IG or Robo Forex. Yeah, the volume data is totally unique to brokers. Yeah, in futures, you have a centralized volume from the Chicago Mercantile Exchange where every transaction passes through. So that volume is the same volume as everybody on the planet sees. I'm seeing Robo Forex's data here. Over there, I'm seeing DarwinX's data. No, sorry, here I'm seeing DarwinX's data. Yeah, their volumes are going to be different because there's different traders doing different things on those brokerages. So it'll probably paint very similarly, but, and again, anything you use on volume profile is no use in Forex, really. You don't need it either because this is the same thing. If you look at a volume profile chart for today, your volume profile chart today will look like this. No, it should be bigger than that. Oh, wiped it all out. It's something like this. You don't need it. Bit rude, that bit. Didn't draw that bit. It's all the same stuff. Can you go over the position trader EA version 1.5 update? No, because we're on 1.61 for a start. 1.5 was a long time ago. If you ever want to know what the differences are from version to version, go and read the manual for a start. It's all covered in there and the video. But if you go to any product on the marketplace and go to what's new, version 1.5 added the max trades to drawdown control settings to allow you to close out fully the oldest trade in a position when the maximum number is reached. Added an amount of money to risk and take profit as an option rather than use the percentage of account. And also added settings for the RSI mean reversion strategy so you can use the reading of the last closed candle rather than the live reading, which mimics basically how the market reverse alerts EA used to read RSI on closed candle, not on live data, which to me is better. I can read, just need to know why you added it. Because I personally wanted to risk money rather than a percentage of account. So risking money in backtesting is a more efficient way of analyzing the success and robustness of a strategy. So this setting is just basically another way to do drawdown control. So using a number of trades rather than a percentage, or you can use a combination of both. Up to you. Just make it more versatile. But that is to give you better backtesting, really. So if you're risking 1% of your account on a trade, what happens is, as your account builds, your lot size gets larger. Yeah, which exponentially increases your profit curve if trades continue to go your way. It also makes losses bigger. If you use the same exact risk on every trade, say $500, regardless of what your account balance is, that profit curve won't go exponentially. It will show you what would actually have happened from a risk-reward based perspective a lot more accurately. So whenever you're doing backtesting, it's better to use a fixed lot size or a fixed amount of money risk rather than a percentage. Most people will tend to use a percentage when they trade, but your backtesting will show you a completely different P&L curve. If you go and do a backtest and use $100 risk, and then do the same backtest using 2% risk, you'll find the equity curve will be completely different. But the one that is more stable is the one that's using a fixed risk, because the risk doesn't change. Yeah, we're not increasing our risk, if you like, as we increase our profit. It means that when you get drawdown, if you, let's say, for example, shut the door. It's very windy here today. So let's say, for example, you get a big drawdown on the account. If when you got into that drawdown, your risk was $2,500 because your account had grown from when you were risking 500 to now risking 2.5, that massive catastrophic drawdown will happen a lot quicker than if you were using that. Especially if you're using a drawdown control setting based on number of trades, not on percentage drawdown. So it just opens up more doors for testing, basically. And that was something that people have been asking for, the RSI. And it's how I used to trade it. So I always use RSI. So the dashboard, for example, the RSI dash, works on candle close. Yeah, so this is not a live reading. If you go and look at the, well, Aussie New Zealand's a good example on the hourly. Aussie New Zealand is reading at 56.73. It's actually 54.98, but it was 56.73 on this candle's close there, that reading there. Yeah. So basically what it's doing by adding that setting into the EA, it means that the candle has to close strongly, therefore giving us a better entry, which is how it used to work and how this works. So I'm just trying to mimic the dash, basically. I think it's a better way to do it. So this setting here, last close candle must be above below level. I've got that set to true. I think it's a better way to do it on candle close, because especially if you look at Euro US or any US dollar pair yesterday, the RSI reading there, where it started and where it ended was a huge differential. Yeah, so you had a 14 point difference during that 1 hour. Yeah, but when it closes above there, it's confirmed that there is still strength in the market. We want to get in as this market is strong on signs of weakness. So the market's been strong, it's remaining strong. As soon as you get that bearish price action, that's when we want to jump in, because these guys are on our side. Whether they follow through or not, we don't know, do we? But we want to get in after the strength. That's what it's doing. It's just, but always go into the what's new. It always tells you whether it's a bug fix or whether it's a feature, if you like. My new saying, if you've got to ask, just Agimat. Agimat. He's very clever. He's very clever. He's, yeah, Agimat. What was it? I can't remember his name. Bernard, wasn't it? Or something. But yeah. Is that still going? I'm not even going to look it up. 3 indicators mashed together, giving you an arrow on the chart. Agimat. Right. We're going absolutely nowhere on the Dow today. Came off of yesterday's low. We are now rejecting the opening range. The S&P, you got yesterday's low bounce. Again, rejecting the pre-market highs. The Nasdaq's the only thing that's actually managed to make any progress today, up to 2R. But it's a hedge everywhere today. So Nasdaq upside target. Oh, it's already done it, isn't it? Monthly high it's coming off of 150 ADR. I'm going to close my longs there and see if I can get out on a bounce off of that monthly high. The Dow is also coming down. I'm loath to get out. The Dow is too far down. I've missed the exit. I would have taken an exit inside the range, but I didn't spot it. So I'll leave that one running. So going to see if I can get an exit on that one to pay for the hedge today. I will re-hedge it if it continues to rally, but we're up at 150 ADR pretty much. So we're 125, 135 roughly ADR today. So it's exhausted. So average is there. So I'm just looking for a push back down into there. That'll bank 112, which pays for half of that. Best you can hope for today. It's a messy day. It's been a very messy week. This whole week's been a mess. This has been crap. On the PTEA, how would you close a basket of trades when X% in drawdown as an emergency stop? You can't. That's your job. You're a trader. Go into here, look at your P&L and go, holy crap, that's too much. Close. That's the button you use. It's nothing automated. So yeah, then just watch your P&L. It's your job. You shouldn't be in enough. If you need an emergency stop, you're in too much risk. Yeah. So you should be using drawdown control. There shouldn't be a need for an emergency stop if you're using drawdown control in any way, shape or form. This is your emergency stop in effect. And aggressive drawdown control is your emergency exit. Yeah. The way I usually tell things are going really badly wrong, if I've got multiple aggressive drawdown controls which are failing, it's time to start putting the plug. Yeah. If you've got to a point where you're doing aggressive drawdown control and the aggressive drawdown control is just flying through levels, time to get out. You've got to look at that as a human being, because you can't just pick a percentage. I covered this the other day. Let's say, for example, you're in short on this and you've got in way too close together. Yeah. And your exit is 6%. If you get to this level here, right, and that is 6%, the EA will go, sorry, you need to get out. And it will shut all your trades down. I'm looking at this and going, there's a hell of a lot of limit orders there. I need to take an aggressive position. I'm thinking I need to add more here because there's much more probability of a double top bounce at a monthly high with limit orders triggering than there is of it not happening. I don't want the EA to close me out accidentally while I'm asleep as we're approaching a level I think is going to be good to try and exit a trade that's gone wrong. If it slams through that level, I can make that judgment call myself. But I don't want the EA, and you shouldn't want the EA just to close you out because a number's hit. You've got to look at where we are in the grand scheme of things. Yeah, the reason I've taken this Aussie Swiss today is not because necessarily of that. It's because of that, with that backing it up, with that, the 4-hour hitting and the ADR all put together. The EA can't identify all of these things. And if you could get the EA to identify all of these things, it would very rarely take a trade. Because as a human, you've got to be able to just look at stuff and go, that looks pretty good. That's why I'm in this. I'm not in it because of anything specific. And equally, if I was in drawdown right now on this short, and I was about to hit my drawdown maximum here, I'd be thinking about turning that off. Because I've got this beautiful limit trigger at monthly high to come, which is likely, as it's so extended, to form some strength to the downside. How much it gives us, whether if it gives us that or it gives us that, doesn't matter, does it? If I can get an aggressive drawdown control on there and bring my average up, I can get out with no loss rather than taking a 6% loss or whatever I put in, because that level exists. And again, it's just adding more complication to the EA for backtesting. There's more variables. The more variables you have in an EA, the more curve fitting you will do. So when you run a system parameter permutation test and you run 100 tests and all 100 tests come back as positive, it's robust. If 20 tests out of 100 come back as positive, it's not robust. If you pick one of those, you've curve fit. The more settings you have, the more probability it will find a profitable result, and the more curve fit that will be. Yeah. So if you did sort of back testing and you put a failsafe of 3% in there, you're going to get lower drawdown overall and miss the squeezes. But going forward, it's going to limit the profit potential of it as well. But you'll find a better setting. You'll find a better trade. I've been going through some old back tests today, looking at some of my old back testing and some of the system parameter permutation tests that I ran. I've even got an old tests folder, but this is specifically for the position trader EA, because I want to put some set files out for people, because I keep getting asked for set files, and I've realized I haven't got any set files around, because most people that got position trader EA had or have been doing the Bootcamp or the market reverse alerts EA, so they kind of know how to use it. I think it's this one. Yeah, so this one, I've got loads of different tests of different RSIs. You know, there's 1,000 tests there with 960 positive results. That is robust. Yeah, so if you use RSI 80-20 14 on the 4-hour, yeah, there's 960 variations of strategy there of 1,000 that produce a positive return. If that was only 25, you'd scrap it, because it means the probabilities are, there's, if you do the division, 962 divided by 1,024, whatever percentage that is, probably about 96%, isn't it? 95%. There's a 95% probability one of those will be achieved in forward testing. If there was 100, there would be a 10% chance it's profitable in forward testing. This is what robustness testing and parameter permutation testing is all about, is proving that it doesn't matter where you got in, with what risk you got in, how distanced your positions were, whether you targeted a quarter, a half, or 1% with different types of positions, they all made money. You haven't got to worry, have you? If you start adding another 10 inputs into this, the number of variations goes through the roof, but that number won't necessarily go through the roof. So what you end up doing is picking a variation from those extra 10 that produces double the profit. That's an outlier and a curve fit, and it won't happen again in the future. It will have such a tiny, tiny, tiny chance. It's that bell curve I've talked about before. Yeah. When you're doing testing, if that is 1,000 tests and 10% of them lie here, and 10% of them lie here, and 80% of them lie in the middle, the probabilities of this being a profitable, robust strategy is that. There's going to be ones out here and ones out here that do not make money and make extortionate amounts of money. That long you took just before the 400 ADR day that happened once in 3 years that you banked $25,000 on. Ain't going to happen. It's going to be here. But the majority of the time, normal price action, normal market movement is going to make it robust. That's what it's all about. But the more you add input-wise, the more watered down the probabilities of your strategy being successful are. And you will automatically try and pick the most successful. It's human nature. This one generated $5,000 with $800 worth of drawdown. I want that one. Yeah, but if you pick something around the middle, you've got more probability of that happening than you have of an outlier at the top or an outlier right at the bottom of the test. You know, this is what I'm trying to avoid, is overcomplicating the position trader EA, because if I keep adding so much more functionality into it, there's lots of stuff I could add in, but I'm building an EA, the Swiss Army knife kind of EA that has everything in it, but it's only to test specific things really, rather than try and find a holy grail, if you like, strategy, because you know it's just not going to happen, is it? It ain't out there. I think we're as close as we can get to it. Okay, so NASDAQ exit was good. So almost back at break even on that now. So if I can get a nice little push down into this area here, that'll be some profit today. But other than that, it's whitewash today everywhere. So I've got some more exposure on, which is good. There's nothing particularly nasty drawdown at the moment. Pound CAD is the worst at the minute, but that's mainly because we haven't really moved. I've already banked some profit on that as well, so I'm up on it already. But yeah, week's going all right, 1.7%. So it'd be nice to get some more tomorrow banked and get over that 2.5% target line. But we'll see what happens. I support keeping the PTA simple. Yeah, keep it simple. The most complicated strategies are the ones that don't work, because there's too many moving parts. Think about it like a car, yeah? I've got an electric car. It's got a battery and an electric motor. Nothing else. No moving parts. Doesn't go wrong. You look at an old Mini with 1,000 moving parts, 1 billion bolts. Yeah, stuff goes wrong all the time. The more stuff you have in something, the more chance of one of those things being wrong, the more chance of it all falling apart, which is why you see all these. Steve Marrow's is a good example of it, actually. He's got the, I can't remember the setup. You had to tell by a chart. So he's got the TDI indicator, which has 2 moving averages, a Bollinger Band, and an RSI, and 2 levels. 7 moving parts in the TDI, 7. You've got 4 moving averages, 10. You've got a kill zone, time of day, 11. And then you've got supply and demand levels, call it 12. Yeah, 12 moving parts in that strategy. Yeah, to get a successful trade, you need 12 of those to agree. You need them all to agree to give you a setup. And if they don't, and you're not using them all, why are they there? Yeah, and this is part, because I studied BTMM years and years and years ago, and I very quickly discovered it was, you know, it's market structure. It's something I already knew. It was a different way of teaching me something I already knew. Look, Bollinger Bands, 2 moving averages, and this black line is an RSI. It's a median 14 RSI. That's what I took away from BTMM stuff. It's just a load of crap. But this thing's good. It shows me when the market's stretched. When the market's stretched and I'm looking for a reversal, we're away. That's it. That's all you need. Condition, signal. See what happens. 2 moving parts to my strategy. Market has to be stretched, elastic band theory. We have to have buyers or sellers going in the direction we want to go in. There is no other moving parts. You can introduce moving averages if you want, but then you're going to miss all of the ones because you're going short that were beautiful long mean reversions. You missed them all. So you've eliminated all that profit because that line is there. Yeah. If you want to use a line on a higher chart and a reversal in one direction on a higher chart and only trade in that direction, you've now got an extra 2 moving parts. So we've now got 4 moving parts in our strategy. Yeah. Go and do the maths on it. The variations of condition and signal is 2. A 2 plus a 2 plus a 2 plus a 2, multiply all those together, suddenly that system has got a billion moving parts in it. His has got 12. It's almost impossible to replicate and backtest anything with any degree of accuracy when you're relying on 12 moving parts lining up in the past, because the past is never ever going to have the same replication of candlesticks in the future. So you are literally trying to find something that's happened in the past. And there's, like I said, a lot of this stuff, the 800 moving average, what has that got to do with anything? It's 800 days worth of average price action. Yeah. If the market's gone down and it's below the 800 moving average, I can see that on the chart. If it's stretched and the RSI is extended to the downside, I'm going long. I don't need an 800 moving average. Get rid of it. I don't need a 50. Get rid of it. I don't need any moving averages. I can see price has gone down. The RSI has taught me that, because if the RSI has gone down, price has gone down. So you don't need all of the complication. You need one thing to tell you that the market has got a condition which is met, and then you need something else. Steve Melro was the guy that had the shark fin, wasn't it? So, which is a reversal starting. Yeah, so the RSI shark fin, if you like, M pattern. That's brilliant. But that, this is just market structure reversal. It's the same stuff, isn't it? But overly complicated. Look at all the stuff here. I mean, trading Jedi. But this stuff, this is, the cycles as well. It was the pushes, wasn't it? That Steve also did the three pushes. So I disproved this very, very, very quickly. Not disproved it, but proved that it didn't actually happen very often. So the idea was that you had moved 3 ADR, I think, away from the peak formation low before you started looking for trades. So I did loads of back testing using an EA to test this theory. Sometimes it moves 2 ADR. Sometimes it moves 3 ADR. Sometimes it moves 4, 5, 6, and 7 ADR. The number of instances where it moves 3 ADR and 1 ADR and 10 ADR is 10%. So wait for it to go 3 ADR, and there's a 10% probability that it will come back down again. That's what the data shows. But it's like, yes, the market does move in 3 pushes sometimes, unless there's a fundamental which says it shouldn't. So unless you understand fundamentals, you're hoping that the fundamentals bias is long on the instrument that you're trading. Because if it isn't, that ain't going to happen. Or there's a news event at that point. Again, fundamentals trump all technical analysis. Doesn't matter how good you are at technical analysis. Yesterday, if you're the best technical analyst on the planet, there was nothing in there that helped you whatsoever. Was there? Doesn't make any difference. Oh, it's above the 50 moving average, so I'm only going to go long. Whoops. Yeah. It's just don't know. It's when you've looked at so many things so many times. There's these are the kill boxes. Look, I was talking about earlier. These grey boxes. They're 50 pips away from price. Look at the perfect example of it hitting the box and bouncing at the exact time of day when the New York Open happens. There is a 50-50 chance of that happening. But getting to 50 pips when the ADR of the instrument is 25 pips is virtually impossible, because you need a 2 ADR push. And sometimes it will be 50 pips, sometimes it will be 100 pips, sometimes it will be 20 pips. ADR goes like that. So the times when ADR's up here, you've got a chance of hitting that box. When it's down there, you're never going to hit that thing. It doesn't work. Unless this is dynamic and uses average daily range to measure these distances, it's not going to work. And that's what ADR is, isn't it? Yeah, this is dynamic. These lines are a different distance apart, dependent on the movement of the instrument based on the fundamentals. Nothing to do with drawing a box on a chart 50 pips away from where the open is, or whatever a number is. Yeah, it's a good system, and it's got really good foundations. It's just flawed with the way the whole thing's executed. But it's, if you want to learn market structure and how markets move and waves and understand, and it's about repetition of seeing things hitting. If you see price hit a moving average enough and then push up above a high and then come back and hit a moving average and push up above a high, you're inadvertently learning market structure and learning how bank and institutions drive price. There's nothing wrong with it. It's just repetition of chart time. But you can't focus yesterday's high and yesterday's low. Again, limit orders. Sometimes it respects them, sometimes it doesn't. But what the hell is going on with these moving averages? So what you're saying is sometimes it will respect these, but other times you can ignore those and just use that. So what do I use today, Steve? I don't know. Too complicated. Too many ifs and buts. That's just the problem with it all. That's the problem with all of it. All of this education is they're trying to manufacture stuff to get you to buy it because it's new, you haven't seen it before. But it's always the same thing. This is why I teach what I teach in the way that I teach. I haven't got a clue if it's going to respect that. Sometimes it will, but I know if you put an order in the market to lose money, you will do that. That's the only thing I do know from years and years and years of testing strategies. If you put an order there that says lose me 1% of my account, the market will lose you 1% of your account way more often than it will make you 2%. If you give it the money, it will take it. If you don't give it the money, it will move up and down. As soon as you've freed the market, you've freed the ability to make money. So and this is why there are two indicators, that one and that one. Yeah, if it's moved down and it moves up, buy it. Yeah, if it moves down again, it means that it's going to move up again at some point. So just move your order to a different level and wait for that to happen. It's all about timing. You can't time the market. Wrong, 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 wrong. Right on all of it. Wrong 5 times. Right. Made money. Yeah, it's not about trying to get the kill zone at the time of day with the moving average over here, having just crossed that one in a grey box. And a shark fin appearing has to be above a level. And the Bollinger Bands need to be lower than the shark fin. Way too many moving parts. You'll be sitting there all day, and do you know what you'll do? You'll take a trade because you don't get a signal. And that will be just a waste of time, won't it? Anyway, I've waffled. So yeah, that's what I think of BTMM. There's nothing wrong with it. Good to learn, but treat it like everything else. It's not gonna make you overnight fortunes. So out of NASDAQ, banked 112, 270 loss, so down 160 on the day. Can't do anything with it today. It's just stuck. It's all whippy and nasty and horrible. So I'll be back tomorrow and we'll have a look at where we end up today, really. So tomorrow's news is Canada in the afternoon and retail for the pound in the morning. Bank of Japan, we have got a press conference, so they could drop some bombshells. If they suddenly want to rally or dump the yen, they need to pull money out of other currencies to do that. So we may find there's volatility again tomorrow, especially if the Bank of Japan delivers something unexpected, which it's unlikely, but they can do. So the main focus is going to be the pound and the Canadian retail AM and PM. So I'm back tomorrow morning. We'll trade the DAX and the FTSE. Assuming the FTSE hasn't gone crazy based on that number, because that comes out an hour before the open. So those are your news tomorrow. So if you've got any pound or CAD exposure, you've got opportunities to get out of that stuff. I want the CAD to rally and the pound to drop. We'll see what happens. So yeah, back tomorrow morning, 7:45. We'll have a look at how the US has ended up today. But at the minute, it's just a case of really waiting, I think, and seeing where they decide to take it. So 7:45 tomorrow. Other than that, have a good day. Hey, go, sir, before I go, thank you very much for the $10. My mentor, the realist. That's good to know. I like that, realist. Go and tell everybody. Come here if you want the real. Thanks for the tip. Very much appreciated. I haven't got anything to spend it on at the moment because I'm not going anywhere this weekend and I've got nothing exciting to do. So I will spend it somewhere soon. Thank you very much. Much appreciated. So yeah, I'll be back tomorrow morning. And anything you need, let me know. I'll be in Telegram or Discord. Other than that, we'll see you next time. Have a good one.